Assalamualaikum and hello to Dr. SAIFUL, HAFIZAH and our fellow friends. We are from group number 1, which consists of AQIL, AIMAN, Daniel, FIQWAN, Anis and Sofia. In this video, we will discuss horizontal analysis, vertical analysis, ratio analysis, and the conclusion that has been reached throughout the studies. Before we begin, allow me to have a brief introduction. Our group have chosen Post Malaysia BERHAD and CIMB Group Holdings BERHAD for this project to be analysed. Our objective is to analyse and evaluate their financial statements over 4 years starting from 2017 to 2020. Then, the obtained data will then be analysed using 3 methods: horizontal, vertical, and ratio analysis. And lastly, we will conduct a comparison based on the analysis that has been made. First is the horizontal analysis. In 2018, the total revenue of Post Malaysia was higher than CIMB Bank, but slightly fell in 2019 and then rose back in 2020. In general, this shows that the number of consumers of Post Malaysia is higher than CIMB Bank, thus resulting in higher revenue of Post Malaysia. In 2018, the profit before tax of Post Malaysia is slightly higher than CIMB Bank. As for 2019 and 2020, profit before tax of CIMB Bank overcame Post Malaysia and remained the highest. This is because during these 2 years, the differences between total revenues and total expenses for CIMB Bank is much higher than Post Malaysia. From 2018 to 2020, CIMB Bank's total assets was much higher than Post Malaysia. From the graph, the total assets from Post Malaysia drastically decreasing from 2019 to 2020. This indicates that Post Malaysia is collapsing. In 2018, the total equity of CIMB Bank is slightly higher than Post Malaysia, but then for 2019 and 2020, Post Malaysia drastically decreasing and was lower than CIMB Bank. This is because the total liabilities for Post Malaysia increased a lot, thus decreasing its equity.
Next, vertical analysis. On average from 2017 to 2020, CIMB has high percentage of current assets that can be liquidated. So therefore, this shows that CIMB can sustain their business in a long period of time since they have sufficient current asset to cover for their current liabilities. In 2018, Post Malaysia's revenue has a net loss due to the lower revenue registered from postal service and increase of cost of sales and operating expenses as well as the finance cost. Based on the graph above, it is utterly obvious that CIMB can support their business longer compared to Post Malaysia. Next, comparison of net current liabilities using vertical analysis of Post Malaysia BERHAD and CIMB Group Holdings BERHAD from the year 2017 until 2020. As we can see, there is an obvious difference in percentage of net current liabilities between these two companies. CIMB has a higher average of net current liabilities because it has deposit from customers, investment from customers and others that are very variable compared to the liabilities that are owned by Post Malaysia. Next, we will do the comparison of total equity by using vertical analysis of Post Malaysia BERHAD and CIMB Group Holdings BERHAD of 2017 to 2020. Alright, as we can see that the total equity of Post Malaysia BERHAD was the highest for all of those years between two companies. but the CIMB Group holdings was more stable but lowered compared to the total equity of Post Malaysia Berhad. But as we know, if a company has a very low of total equity, it is not good. But if much higher, it is also not good for the shareholders, which is the same case for the Post Malaysia Berhad. Comparison of the profit for the financial year using vertical analysis of Post Malaysia Berhad and CIMB Group holdings by 2017 to 2020. As we can see, the profit for each financial year for CIMB Group holdings was higher than Post Malaysia Berhad for all of those years. CIMB Group holdings had a better profit because they managed to get profit from 2017 to 2020. But in case of Post Malaysia Berhad, they had a loss for the financial year of 2019 and 2020.
Now we will look at the ratio analysis in terms of solvency ratios and profitability ratios. Solvency ratios consist of time interest earned and debt to asset ratio. Profitability ratio consists of return on common stockholders' equity, return on asset, and profit margin. Debt to asset. Both debt to asset for Post Malaysia Berhad and CIMB Group Holdings Berhad are less than 1. It indicates that they have more asset than liabilities and could pay off their obligation by selling their assets if they needed to. Time interest earned. CIMB Group Holdings Berhad had a higher time interest earned compared to Post Malaysia in 2017 and 2018. But in 2018 and 2019, Post Malaysia had a higher time interest earned compared to CIMB Group Holdings Berhad. The higher the ratio means that the company has an undesirable low level of leverage or pays down too much debt with earnings that could be used for other investment to get a higher rate of return. Now we will look at the profitability ratios, which is return on common stockholders' equity. We can see that CIMB Group Holdings Berhad had a higher return on common stockholders' equity compared to Post Malaysia in every year. This means that CIMB Group Holdings Berhad had a better management on generating a return. Now we will look at the return on asset. In 2017, Post Malaysia Berhad had a higher return on asset compared to CIMB Group Holding Berhad. But in 2018, 2019 and 2020, CIMB Group Holding Berhad had a higher return on asset compared to Post Malaysia Berhad. The higher the percentage of return on asset means that the company was more efficient in using its asset to generate earnings. And lastly, for ratio analysis, we will look at the profit margins. As we can see, profit margins for CIMB Group Holding Berhad is higher in each year compared to Post Malaysia. This means that CIMB Group Holding Berhad made more money compared to Post Malaysia. Other than that, we know that CIMB Group Holding Berhad had a better management skill, financial health, and growth potential compared to Post Malaysia Berhad. In conclusion, we can conclude that vertical analysis is essential to display the information about the company's growth rate within its industry. Other than that, horizontal analysis can be demonstrate the relationship of each figure within each financial statement. And lastly, ratio analysis can be portrayed in the measure of liquidity, solvency, profitability, and efficiency within the company. Last but not least, we can conclude that in 2017, 2018, 2019, and 2020, CIMB Group Holdings Berhad had a better performance compared to post-Malaysia Berhad. This is because most of the ratio analysis for CIMB Group Holdings Berhad is positive in value compared to post-Malaysia Berhad. Most of their ratio analysis tend to be negative in value. That's all. Thank you.